So let me just start by sharing my screen.
I do not want them seeing you.
And it may look a little different from the one you have. Melina, I'm sorry, a few things just changed, but in essence, it's the same information that we're going to be covering today. Okay. So before we get started, before I bombard you with all of this accounting and tax terminology and things that might be a little overwhelming, I would like to paint a picture here. We're going to use this persona in order to understand kind of like the type of business owner that he is. So we're going to call him Mark, maybe. So Mark is a business owner that just opened his business or has started his business just now. Now we're going to give Mark the type of business that he's running or starting is going to be in the food industry. So he opened a coffee shop. And Mark has 3 employees. One of them is full-time, the other 2 are part-time. And he has also things that he needs to buy, like materials and such. So he started his business from his home. I hope you're taking notes because we're going to come back to Mark, okay? So Mark started his business from his home, baking goods and selling them as he went, but now he is ready to open for business. Also, to make things a little spicier here, Mark is still considering all of the TikTok videos that tell him that he should be a corporation. And currently, he is considered a sole proprietor. Okay? Now, Mark also has a family, so he is interested in understanding how he can do things on his own, or if he should hire someone to help him with his accounting, his taxes, or things that are related to his finances. And he's also trying to get on board with an accounting system at his coffee shop where he's going to start taking payments. All right, so I'm going to throw a quiz question out there to see if we were listening to what Mark is or what he has. And so can anyone tell me how many employees does Mark have? You can throw it in the chat or you can just unmute yourself and tell me.
Tres.
Some 3, some 1.
Tres. 3.
Okay, excellent. All right, cool. We're listening. Excellent. So Mark is going to be our persona for today's presentation. Every decision we make together as a group is going to have a direct impact in Mark's business. Okay, so we're going to build things as we go. And to get started, we're going to talk about how should Mark maintain a record keeping of his finances. What are the expenses that he can deduct? And should he pay quarterly payments? The other thing is, what is the right accounting software for his business? So around those things is that we're going to try and answer these questions for Mark as we move forward. All right, so let's start with the easy part. Someone mentioned in our, as you were introducing yourself, I forgot who it was, but someone mentioned that you need to have your business account separate from your personal. I know someone mentioned that just a few minutes ago, and that was music to my ears because that is one of the main things that I talk to my clients about when we first talk about opening a business. The first thing is you should separate your personal finances from your business finances. So we're going to start with that. The business account and your personal account should not commingle. So the moment that you start thinking about, I have a business idea, now I want to really implement this idea and move it forward and open a business and register my business in any state where you are located. So we're going to use, obviously, the state of Oregon for this example. The moment you register the name of your business and you are officially open or registered with the Secretary of State, the next step is possibly that you need to request an employer identification number. So our first advice to Mark would be, you need to open your business account, make sure that you separate your business and your family affairs completely, and now that you have a business account, also you should have an EIN. In fact, actually, first you need to have an EIN and then open a bank account for the business. This will allow you to separate your finances. The moment you start recording income and expenses in that separate business account, you're going to have a better handle of how your finances are moving forward. Now, one thing I can say is you don't have to start right away with a accounting software. If you are in the ideation stage of your business, and or if you are already established, then your options are going to be different. But the main objective here is to make sure that you start tracking those expenses and that income as it comes. So remember we said Mark has a payment system. So he started by selling out of his home, and now he's been able to open a brick and mortar. So he has the doors open of his coffee shop. And he now obtained one of those card swipers, right, to start accepting payments. So those payments that he's receiving for the products that he's selling at his shop are going to be deposited into his bank account directly. And what account should we use? The business account, not the personal, not the savings account. It should be that business account. And from there on, any transaction associated with the business should be a business account. Okay, other people ask, should I also have a separate account for savings or a separate account for taxes? And it really depends. In my opinion, it really depends on your on what stage of your business or your venture you're in. So let's say that you have already started, you're established, and it's easier for you to move money from your checking account to your savings account so that you have a cushion in your savings account to pay for other responsibilities or just have it in case of an emergency. That is always a good idea. Also, other people or other business owners separate or create a separate, checking account that has the payments for taxes alone. So they want to track payments for taxes in a separate checking account. And that's also a good idea. I'm not opposed to that. As long as you don't get confused with more than one checking account, the idea is to make things simpler, right? To help you and simplify the process of how you record your finances. Now, it is a good idea to keep this in mind. As you start your business, track how the money comes in and how the money goes out. And usually, I have seen this happening very often where business owners say, well, I need money to pay myself. So what I do is I deposit the money for my business in my personal, and then I transfer the money. I would argue that it should be the opposite. Any business-related transactions should go in your business bank account. And from there, if you need to draw money for personal use, you should then transfer that to your personal bank account, not the opposite. Okay, so if anything helps you from this, for the beginning of this presentation, is to make sure that you separate your business transactions and your personal transactions. Now, here's something that we always hear from clients. What can I deduct? What is considered a deductible expense or things that will help me in my tax deductions and what I can do to lower my taxable income? I would say this: it is never the goal to make sure that you don't pay any taxes. When people have the idea that you're building somehow this tax strategy that will make you magically not responsible to pay taxes, I would say that that's perhaps not a good approach on how to manage your finances. Whether we pay income tax, state tax, payroll tax, or sales tax in some cases, there is always some type of agency or government agency responsibility. So what I would like to help you is in providing you tools so that if your goal is to lower the taxable income, that you understand what are those things that you can deduct, but more importantly, how can you remain profitable so that you don't have to worry about a tax bill, right? Because if we are in business, we did not start our business to see how we don't have to pay taxes to the government. So we're starting a business so that we can stay profitable and we can be compliant and pay our responsibilities. I am not a fan of overpaying to any government agency because there are strategies that business owners can utilize, and that I'm not opposed to. But the main goal here should be how to build a profitable business where you don't have to worry about paying taxes. So with that in mind, what are the things that you can deduct? And in the eyes of the IRS, there are two things that need to happen. Number one, the expense or the deduction should be common and accepted in your industry. Okay, so in the case of Mark, he is in the coffee shop or restaurant business. So we are going to use expenses that are accepted in the industry where he has his business. The second thing is it should be necessary. So what is necessary? Anything that is helpful and appropriate for the trade or the business. Those two things. And let me just throw a question out there. So let's say that Mark decides that he's going to maybe buy a new piece of equipment, or he's going to remodel the coffee shop. And he has to decide what piece of equipment he needs to buy. So he saw this, let's say this coffee roaster, right? That the cost of that coffee roaster, market value could be $5,000. But he saw this other super fun, super high quality coffee roaster that costs triple the cost of $5,000. So this one, the second option would be $15,000. Both of them will have the same function. Both of them are accepted in the industry. Both transactions or both purchases can be appropriate for the business. Now, the decision here is, what is Mark's cash flow that allows him to make that purchase, or what would be the best decision for him? So we're addressing the deductions in ways that something as ordinary is necessary and it fits your budget. Just because it's tax deductible doesn't mean you should spend the money. You should be mindful of how you're spending the money that you earned for your business. So with that in mind, let's move on to something that is super, super important for Mark. Is the cost of goods sold. And for people that are in the business of selling food, whether it is a food truck, a coffee shop, or you're selling items, or a cater business like Kristen's business, ingredients and materials are going to be the main product or the main item in order for you to sell your product. So I invite you to take a look at this picture. And I'm going to give you a few seconds just to look at this picture. And now we're going to select from here items that go directly into making, I don't know, I'm not a baker, so let's just say that Mark is going to sell a lime pie. With that in mind, let's identify those materials that go into making the pie. And again, I'm not a baker, but I'm gonna need help here. So we're gonna go one person at a time, and we're going to identify the materials here. Feel free to unmute yourself, throw it in the chat.
The kitchen or commercial space that they use.
Okay, okay,
Thinking in a
excellent.
broader spectrum.
Okay, so wonderful point, Alex. Now let's look at the picture here, and we have, what do we have on the table? Let's identify things that go into making pies.
Lisa said utensils in the chat. Someone said flour, sugar, egg, lime.
Excellent. Okay, I love it. So I heard flour, sugar, lime,
Mhm.
and the utensils. Okay, let's start with that. So the flour, the sugar, and the limes, those are materials, right? Raw materials that go into making that pie. Those materials are called cost of goods sold. And Mark needs to purchase those items in order to make the pie and to sell it. The amount that he spent buying those materials will be classified as cost of goods sold for his company or for his shop. This, in the end, will help him calculate the business profits, and he will be able to know if the amount that he's charging for his pies covers the material, the expenses of the materials. It'll also help him understand if he bought enough sugar, enough flour, enough limes to bake those pies, right? And how do we know that? Well, we calculate, we track those expenses, and we classify and categorize the transactions as they happen, or ideally at least once a month. I also heard someone said utensils, and the other items that you see on there that will be used, the supplies, perhaps. I see the cutting board and other things that I don't know what they're good for, but I'm sure they help Mark in something, right? So the utensils are items that he uses, and we're gonna call those supplies. The supplies are also part of what he needs to buy in order to sell the product. The rest of it, the furniture, the appliances, big or small appliances, those items are purchased, but they're not necessarily part of the cost of goods sold. So they're going to be assigned a different category. And later on, we're going to create a purchase of items and expenses through, hopefully we have enough time to do a live demo for that. And we're going to see how those items fit in what order we apply them. So now that Mark has opened the business, he's opened his bank account for the business, he's learning how to categorize expenses, how to separate all of that, and categorizing the cost of goods sold properly and all of the other expenses. Now he has to deal with taxes, right? So what happens with this big idea of taxes is that we often believe that taxes are going to be this enemy, right? That we don't have to be paying, that the government is out there to get us. And the reality is that one way or the other, this is inevitable. But the way that we approach it and how we organize our finances to make sure that we pay the fair share, and by fair, I mean that you're not overpaying or you're not underpaying, that we're able to create a plan that you as a business owner, you will understand what it is that you need and what are your requirements or your requirements as a business owner in order to be compliant. This is part of that, that painful, in a way, concept that most people, like I said earlier, we believe that, oh, the taxes are going to be our enemy and we have to do everything possible to minimize the responsibility that we have. So I want to address a couple of things. And oftentimes I hear from people, the moment they start their businesses, they say, oh, I need to pay quarterly taxes. My answer to that, and to most tax questions, is going to be, it really depends. You don't have to pay quarterly payments for every type of entity. So let's understand what quarterly payments mean and why they are important. Okay. So remember we talked about maybe Mark wants to create this additional bank account for taxes, right? So someone told him, you're going to have to pay quarterly taxes. So Mark has 3 employees. So that means that by default, he's already paying payroll taxes, right? And he's also managing his finances with his bank at the same time that he's processing payments. So at this point, he just wants to know, how much should I separate for taxes? And what is a good rule of thumb if I have no idea what my finances are going to look like at the end of the year? Remember, this is the first year that he opened his shop. So we don't know the exact numbers. We don't know all of his finances or the reports at the end of the year. My suggestion to Mark would be, try to save at the very least 25% to 30% of your net income in order for you to save towards taxes. Before you spend money, or before you take that money out for your personal expenses, make sure that after you have paid your vendors for materials, after you have paid your employees, after you have paid payroll taxes and all of those things, make sure that you separate or you put aside at least 25 to 30%, so that in the event that you need to pay quarterly taxes for income tax, you have that cushion, you have that money there. So this is important because you are responsible now to keep a good management system or financial management system for your business. Another good motivator is to avoid penalties and interest. So people say, do I really pay penalties and interest if I don't send quarterly payments to the IRS? And the answer is yes. If, and it really depends, if you are a sole proprietor, right, that you own your business, but you don't have any type of entity formed, and you are responsible to pay taxes at the end of the year, chances are that if you didn't send estimated payments or quarterly payments, that you may end up paying for penalties and interest. This also helps you to stay compliant. We want to stay compliant with all the government agencies, and one way to do that is by ensuring that we're paying ahead of time. And not just to throw any amount of payment, but just try to work with a professional that can help you estimate or calculate what your estimated payments would be. At the same time, you're going to be able to manage your cash flow more effectively. Hopefully, we're going to avoid any type of IRS audits, and you're going to have a better financial stability and planning. Okay, so I was talking about separating approximately 25 to 35% of your net income for quarterly payments. And the idea is so that once that money is out of your business bank account or your regular business account, that you have that extra money in the event that you need to pay those estimated and quarterly payments. Okay, now let's keep on talking about taxes. So these are 4 or 5, I'm sorry, common taxes that Mark is going to be responsible for. So let's bring Mark to the picture. And let's use his business as a model for this. So we established that he is a coffee shop, and initially he is he was set up as a self-employed. So he does not have a corporation or a business entity established. He is self-employed. And as a self-employed individual, he's going to have to file taxes with the IRS. He will file taxes with the state of Oregon, and depending in what county he lives. So let's just make it even more fun. Let's say that he's in Portland and he lives or operates out of Multnomah County. So he's going to have to pay Multnomah County taxes. And because we already established that he has 3 employees, he's going to have to pay payroll taxes. Something that Mark had no idea that he needed to do. So we're going to help him break things down. To do that, let me just stop sharing for a moment. Let's see. I'm trying to find
So
this.
I have a question.
Hi,
So what
Denise.
if you started your business or whatever, and like you put some taxes away or some money away, I guess, for taxes, but you have to like kind of dip into that for like, like finances and bills and different things like that. Like what do you do about it in that situation? Like if you do owe taxes.
I'm sorry, I didn't hear the first part of your question. I think you were breaking up a little bit. Would you mind repeating that?
Yeah, I said so. Say like if like I started my business already and I've like been putting money away already, like towards taxes or like whatever savings or whatever, but like I had to eventually like use some of that money and it's not all of what it was. Like then what do you do in that situation?
Okay, so essentially the picture here is that you had to use the money for either personal or for operating expenses of your business, and you didn't have the money to save it for taxes. And one thing that is important to know here is that a lot of the savings that comes into play have to do with cash flow management. So it is very challenging for small businesses, especially at the beginning, to be able to save money. And we see this happening with businesses on their first, second, and sometimes in the 3rd year. It's the reality. Not everybody has money to put it aside and save it. This is why we recommended that if you're able to, if cash flow allows, to save that extra 25% for taxes. And we noticed that the net income piece, net income comes after you have met all of your responsibilities of paying your vendors, paying your employees, paying the rent of the place that you're where you're operating. So it is with the understanding that if there is a net income, that you should set aside at least that 25%. And it really will depend on the type of business that you run. And yes, unfortunately, most small businesses do go through cash flow, cash flow challenges in the very first 2 years. So it's something that we see often. And unfortunately, if you don't have the funds to pay or set money aside, you don't. So when it comes to filing your taxes at the end of the year, you have to pay whatever amount it's due all in one lump sum. So putting money aside actually helps.
If I could interject here really quick, Astrid, I just want to add for Tynese, this is a great question that could be addressed in our next workshop on Thursday. We actually have someone presenting on the topic of access to capital, and he'll be covering specifically ways that businesses can access capital to help in launching, stabilizing, and growing a business. Because as Astrid mentioned, this is a challenge that affects so many different businesses. It looks like Licha has some information to share as well. Please feel free to go ahead and jump in.
Hi, thank you. As I mentioned earlier, I've been doing bookkeeping for 15 years, and what I have learned from business owners, they have several accounts depending how their business is. They'll have a checking account where you pay your vendors. They'll have a payroll account where money goes for payroll and it's not being touched. There's a deposit account. When you collect deposit, you leave that money there. And when the job is completed and the deposit is not refundable, you move it to a saving account. And then payroll, not payroll, the taxes is also a different account. So it's all about how you manage your money. From my experience, my bosses would put their saving in a high APR, so they can, when they don't touch that money is building. And we also do the quarterly payments. So when we do get hit, if we have a good year, we get a big hefty taxes. The money is there, and we don't have to find option on how to pay off the taxes on the following year, because it can be really stressful for a small business to do quarterly deposit for the current year and catching up from the prior year. So that's just the experience that I want to share when it comes to the cash flow.
So like I do daycare, I do childcare through the state, and they just like send like the straight check, and it's like I'm responsible. Like I don't have employees, it's just me. And then like my mom and they like help me. I like if I need to go to a doctor's appointment or something like that, so they just come and like help volunteer or whatever the case is. So it's like I think I would just be paying like self-employed taxes, maybe like self-employment taxes, and then like whatever state taxes I get. I'm like, I don't really know what taxes I would even have to pay when tax time come around, but it's like I have been trying to put something aside just because it's like I know they're not taking out taxes. So I know Uncle Sam is gonna be coming like, excuse me, where's my money? Like, so that's my thing, is like what will I have to pay? What will I have to pay like at the end of the year when it comes to taxes? Would it just be self-employment taxes and then like state taxes, or what all would it be? Do anybody know?
Wonderful. That's a wonderful point, Denise. We're going to address the different taxes and how everything flows into income. And also, WeChat, thank you so much for your insight. That was very helpful. Thank you. And I see other comments on the
You're
chat
welcome.
about giving 1099s and other things. We're going to address that in the next couple of minutes. Now, I want to keep using this persona that we created at the beginning so that we can understand how the money is flowing, right, for his business. So initially, we mentioned, and maybe this also applies to you, Denise, that Mark is not only self-employed, but he's considering becoming a corporation, but he's not there yet. So he's a self-employed individual that has to pay income taxes and report his income or his business income with his personal taxes. And here's what happens. Oftentimes, I hear people saying, I will file as an LLC so that I can take advantage of all the deductions. One clarification that I would like to make here is an LLC is a legal vehicle. It's a limited liability company that allows you to have a legal protection from your business and personal assets. Assets are things that you own as an individual and as a business. Now, the LLC, it's not an entity. Again, it's a legal vehicle. So taxes, in some cases, when you have an LLC and it's a one-member LLC, the IRS considers you to be a disregarded entity. And what that means is the IRS says, okay, so you filed as a limited liability company as one person. I would like for you to continue to file as a sole proprietor and report your income from the business with your personal taxes. So there is no difference when it comes to filing your taxes. So we're going to address that, okay? And to do that, I like looking at forms. And if some of you are self-employed individuals, you may have filed these forms already with your tax return. This here, it's called a Schedule C. And what that means is it's a summary, or in this case, it's a profit and loss statement for people that are sole proprietors. And in this form, the tax professional that you're working with should be able to fill this out with all of that financial information that you gave them. The name of the business is listed here, even if you file with your name. So here's the name of you as the proprietor of the business, your business name. And if you filed or you obtain an EIN, an employer identification number, you will type that number here under employer identification number. The rest is going to be a summary of all of the income and expense that you received. So we talked about the sales, right, that Mark is having for selling at his coffee shop. We talked about cost of goods sold. Now we're talking about profit. Understand that profit in this case is your sales minus those ingredients, those materials, supplies that you use in order to sell the product that you're selling. In your case, Denise, you are a service provider. So we need to review what are in your case, what are the cost of services or the cost of providing that service, because you're not selling a product, you sell a service. So now we're going to bring up this form. This form here is the form that it's filled out when we want to report the costs of the materials that we're purchasing. So when we were going over the cost of goods sold, we said inventory. So I know that some of you are thinking about selling food or are already selling food. So your inventory is pretty much how much you started that year. The purchases or the materials that you get are going to be those things that we talked about, the flour, the sugar, and all the items that you need to make the product. So that would give us the total of cost of goods that are sold. And this number here then goes into this line item number 4. Okay, so just for exercise purposes, let's assume that this person is also tracking items or expenses like advertising. He uses the vehicle for business. He has to pay labor. And in this case, they're not going to be the employees. These are going to be people that he pays outside of his employees. And all the other expenses that are related to the business. As he finishes, we're going to come up with a net profit. or a loss, depending on how he handled his finances. This item, all of this information, then is transferred to something called Schedule 1. I'm not going to confuse you with forms, but I want you to follow how this money is flowing into Mark's personal taxes. So this total, it's going to make it to a form called 1040, specifically under something called Schedule 1. But the 1040, it's the form that all of us taxpayers are responsible to send to the IRS to file our personal income tax. And that form looks like this. So if you file taxes, you're probably familiar with this form. Now, here, under this form, you see this line item 8. It says that you are to report your additional income coming from Schedule 1. We established that Schedule 1 is your business income, and any income from all sources should be reported here. Now, one more time, Mark has a business. He filed, or he filled out, not he, hopefully his tax professional did it correctly. They filed this form, the Schedule C. Now this information is then transferred over to Form 1040 to report all of the income that he received. And here we're including, maybe he had another job. So we didn't establish that. So we're going to leave that out of the question, out of the equation. But maybe he earned interest. Maybe he has dividends. And all of those other sources of income will be reported here. Now, we talked about quarterly taxes, right? And potential penalties. So what happens after we come up, sorry, I'm going to go back a couple of lines. So after we come up with Mark's taxable income or the total income, then there has to be a tax calculated. So he will be responsible for income tax. And Denise, to your question, for self-employment tax, in addition to your income tax, other taxes also include self-employment tax. Okay, so notice that there's two line items. So it's not just one income tax, it's two. So you pay taxes as a self-employed individual or sole proprietor and income tax for all the income that you received in that year. Now, if you made quarterly payments or estimated payments, those payments are going to be listed under this category of payment. So if you send estimated payments in the, or, before, that amount will be listed in if any estimated payments that you made or amounts that have been applied from prior years. Now, in the event that you were supposed to send estimated payments or those quarterly payments that we're talking about, if you don't send that money, there is a potential tax penalty for estimated tax penalty payments. Now, Mark's job is to make sure that he gathers all of the expenses, all of the income information, so that the tax professional that is helping him is able to maximize all of the deductions, apply all of the things that he may be eligible for, create a strategy that he might be able to qualify for in order to minimize his tax responsibility, all within the compliance part of things. I just bombarded you with a lot of information, so I'm going to stop here. Okay, I'm going to stop and I'm going to open up the room just for a couple of questions. I saw people writing in the chat, so.
I have a question.
Yes, ma'am.
Will there be like a pamphlet or a booklet that we can kind of go back to and look at the stuff that you was talking about, like the PowerPoint that you just did?
I will make sure that I send this over to Melina. This is the updated slides that I had. So yes, Melina will have them, and I'm sure she'll distribute them to the group.
Yep,
Thank
and in
you.
some future as well, we maybe will be able to provide the recordings to this training as well. So that is to come, although we will need some time to be able to work on that.
That's awesome. I know this might be too far, but do we do a link, or is there going to be like another link for us to be able to sign up for the next 2 classes, or do we just automatically get the link sent over because we came to this class?
We will make sure we'll send it as well, but yes, we could put that in the chat right now for you.
Okay, thank you.
Mhm.
I did add the registration link for the class that I mentioned. That's this Thursday. So if you go to the chat, you should see it as one of the more recent things. It's for day 2 of ABCs. And Lizette, thank you for dropping that into the chat again.
Thank you.
So do we just copy and paste it, or do we just click on it and save it?
You'll want to click on it and follow the link. It'll take you to a registration so that you can go ahead and register for this Thursday's class.
Perfect. Thank you.
Mhm.
Okay, awesome. That's super helpful, and I'm so glad that there is a follow-up to this in the next session that would be for access to capital. That's an amazing topic. Any more questions of what we just discussed?
And Ashley, just to clarify as well, your information will be provided as well in case anyone needs help or wants to reach you for your services as well, correct?
Yes, I'll be happy to. We offer 30 minutes of free consultation. So I'll share all of that at the end.
Mhm. Of course.
Yes, of course. Thank you for asking.
Mhm.
Okay, so now what I want also to give you is some time to also stretch. And how do you feel about, Melina? You tell me if it's time for a short break.
You are right on time. My goodness.
Okay, good to know.
Dialed in.
So,
Yes. Yeah, thank you. Yeah, so we are gonna take a break. Please, like I said, do not leave the meeting if you can. Just turn off your camera, turn off your or mute yourself. And then feel free to take the break. We will be back in 10 minutes at around 6:25.
all right, wonderful. And I hope you had your short stretch break. And now here's something that I am personally passionate about. When I work with small businesses, I love the technology piece of the accounting process. And I get this question oftentimes: what is the accounting software that you should be using as a business owner? And thankfully, there are options. Now there's not just a one thing that fits all businesses. It really depends on your industry, but there are some that are very common, and some that other people prefer, some that are too expensive. And so we're going to try to go over that. But before we continue, I would like to ask you if, as a business owner, if you use an accounting software to manage your business finances. And feel free to answer that in the chat, please. And I would love to know maybe a couple of answers. Okay, I see no. Cool. Okay, thanks for, oh, Wicha does it manually. That's wonderful. Okay, someone just got QuickBooks. And thank you for sharing. That's good to know. All right, so now here's something that I believe that it could help Mark, right? Remember, Mark is also a family person, so Mark will probably need or would appreciate some time back to him for his family, to do his personal hobbies. Maybe he likes a sport and he likes to go and use some of that time. And in some cases, utilizing an accounting software can really help you and automate a lot of these transactions and minimize the amount of time that you have to spend doing all these tasks that in most cases, in the cases which is different because she is in the accounting industry, but if you're not an accountant or this is not your business, then you may find it tedious to do the repetitive tasks, right? So here are some options that I have come across in terms of what is a good accounting software. QuickBooks Online, and I should have specified that it's the online platform, the one that I prefer. Not because it is a robust software, but because it's very common in the small business arena, and there are so many updates constantly happening. And I personally run a tax practice, an accounting and tax practice that is 100% virtual. So I want to be able to work with my clients on the cloud and access their finances in real time and exchange information virtually. So what better way to do that in my case than with the software that I can access online? There is another software here called Xero. Xero is, I may say that it's really giving QuickBooks a run for their money. This company, it is my understanding that they were established in Australia and they're quickly moving into the US market, and they're adapting things for small businesses here in the US. And they work very well with a lot of the features that QuickBooks Online offers for their businesses. Another software that I use is for some of my clients is FreshBooks. FreshBooks is, I can't say it's fairly new, but I started using it maybe 2.5 years ago, and it's been really good. But it applies mainly for service businesses like freelancers, self-employed individuals. I can think of maybe Chinese being one of those perfect candidates for that type of software, because it does not support inventory. So any business that wants to deal with inventory, I would not recommend FreshBooks. The next one is Wave. I personally don't have experience with Wave, but I hear a lot of people talking about it because some of the features are for free or very low cost, and a lot of people prefer it. Now, from an accountant point of view, one thing that I want to see in order to help my clients and manage their finances, I want to see a robust general ledger. And I don't know enough about Wave to tell you if it's good or bad, but I know a lot of people use it. I'm just not the expert in it. Soho Books, I have also used them, and they're very similar to FreshBooks in the sense that they are tailored to service providers and people that that may be self-employed, freelancers, consultants, people that don't need inventory management. So with that, I would like to do a quick demo of some transactions for Mark's business. Okay, so we will work together because this is a team effort. So we're all going to pitch in here. We're all going to help each other, and we're going to help Mark more than anything. So we called it Mark's Coffee Shop. This is not a real company, obviously, but I want to kind of walk you through what this software, in this case, I'm using QuickBooks Online, and what it looks like when a business is open. Or when the user actually opens the business. So there is a dashboard. So just like the sound of it, it's a dashboard that tells you what is your balance in your account, what are your sales, how is your cash flow trending, And is the money getting deposited? Do people owe you money? Do you owe money to vendors? And those things that you want to see as a business owner the moment you open your accounting software. Now, in the left menu, in this navigation menu, there are so many options, but today, so that we can utilize our time together more effectively, we're going to build transactions that would later help us understanding the different statements or financial information that we need as a business sells and collects money and spends money, okay? So we're going to start with, again, back to Mark's scenario. Let's think for a moment that Mark has been asked to sell or host the next gathering for Hacienda, CDC, right? So he needs to sell and provide food for about 20 people. So he's gonna bring in a club sandwich platter for the event. He's also going to provide a pie because, you know, they need a dessert. And he will also provide maybe coffee somewhere in there because, you know, it's a coffee shop after all. So we're going to start with the first accounting cycle in this case, which is obtaining money. So cash in. How do we do that? So we can use different shortcuts. So in this case, I'm going to use the navigation on my left. And I'm going to create an invoice. Now, Mark has a lot of invoices that are still past due, but we're going to forget about this. Now we're going to create one new invoice. And we don't have the client yet, so we established that is Hacienda, CDC. So that is the client. And he wants to get paid when he delivers the food, right? Because you're delivering it, so you want to get paid when you deliver it. The next thing is we established that he will be selling club sandwich platters. And I need help from people in the food industry. How many platters should we plan for? Come on, don't be shy.
10.
10, okay. And how much are we going to charge per platter?
50.
$50. Awesome. Okay. Now we also need a pie. Or how about muffins? Muffins, I'm in the mood for banana muffins. So we said that we have about 20 people. So we're going to sell 20. And each muffin, it's going to be $4. We're in Oregon, so we're not going to worry about sales taxes. So that's good. Now coffee, we have drip coffee that he's going to bring one of those big boxes of coffee, right? So we're going to say that that costs $29. Okay. Now this order came down to $609. Okay. So in this example, we're going to save and close this transaction. Now, at this point, all we know is that he has something that he's going to receive in the future. So he doesn't have he hasn't received the money yet. So the money has not made it to the bank account. And we know that the invoice, it's just sitting here, nothing has been received. So what happens next? Let's assume that the food was already delivered and now he's able to receive that payment that he billed the company for. So he's going to receive that payment. And let's say that he received it on the next day. How was that money received? Well, in this case, it was a check, and we're going to say that it was check number 100. And we're going to deposit this check into his checking account. So now we have $609 in the bank, quite literally at this point. Okay. Now
Esther, sorry to interrupt. So I have a quick
Yes.
question.
Yes,
Does
sir.
that mean you're like in real time controlling where the money gets deposited? So it first goes to QuickBooks and then from there you channel it to wherever account you want? Or are you just kind of writing notes as to how it happened? Like, oh, the money was deposited into my checking and now you come back and kind of like write the receipt per se.
Okay, no, we are doing this after the fact.
Okay.
So the first step was we are issuing an invoice to our customer.
Mhm.
So when the customer paid, there is a deposit that happened to my bank account. So I want to indicate that the money that I received was deposited to my bank account. And I think I understand your question about how things are connected in the back end, and I'm gonna touch base on that as well. Okay, thanks for the question. Very good point. Okay, the next thing is we're going to assume that, of course, he had to buy materials, right? For all of this money that he's collecting. So now we're gonna go to the expenses side of things. And under expenses, he had to buy the banana muffins from somewhere. He does not bake them, so he buys them from a provider. So let's just assume that we're going to create a bill. A bill is an item that you are going to owe money to a vendor. So we're going to find a vendor, and in this case, we're going to say that Kristen, I think, Kristen Bakery. Kristen, I'm using your name as a bakery idea here. So you are the provider for Mark's muffins, and who remembers how much he sold it for? Was it $5? I think we said $4. Okay. So he bought from Kristen. Now he bought the item. So we're gonna say that it was, in this case, we're gonna create an expense. Oh, no. We're gonna call this cost of goods sold. These are going to be materials that he purchased. Now we're gonna say that he bought the 20 muffins that he sold for $4. We're gonna say that he bought them for $2. Okay, so we're gonna say that that was $40. And the next thing is, well, he's a coffee shop, so he doesn't have to buy the coffee from anyone, but he does have to buy the bread to make the sandwiches, right? The club sandwiches. So we're gonna say this is the bread or the French baguette. Now I'm getting hungry. Now I want club sandwich for dinner. All right, so let's assume that at this point, he spent about $150. Okay, so here we go. This was the expense, and he needs to pay his vendor. So he needs to pay Kristen's Bakery for this. Now, we didn't have any expenses a while ago, now we do. So to do this, now he needs to pay, and we're going to access this, make a payment, oops. Schedule a payment or make a payment to this vendor. Oh, great. They want to sell me stuff. No, I don't want to buy anything. So in this other navigation menu, we're going to pay bills. And here we have Kristen's Bakery. We want this to be delivered right away, so we're going to schedule a payment. Right. Save and close. Oh, what account we're paying? Sorry about that. So we're paying from my checking account and save and close. Okay. Now, two things we have done. We receive money. So that was the first cycle of money coming in. The second thing is I paid my vendor. So that is money going out. Now I want to know, he has responsibilities, right? So he's not just paying to the provider. He also has to pay supplies or packaging stuff. So let's just say that he had an expense, not a bill, because he's not paying to a provider yet. He's going to pay and he's gonna buy things at Target, very expensive for packaging things, but let's just assume he went there. And he bought supplies. And that cost him $75. Okay. So we have three things: income, payment from the vendor, from the customer, payments to a vendor, and expense for materials. Now, in this case, we want to know how profitable it is or what profit he made from that order that Hacienda placed to his coffee shop. So the advantage of having an accounting system is that you can run reports in real time as they happened. And in this case, we're going to say that any transaction that has to do between today and tomorrow, because we recorded things as of tomorrow. And we're going to run a report. Now, here is a profit and loss statement. Oh, maybe this was... When did I receive my money? Here we go. Okay. So we know that he has service and the product. These are the muffins. The invoice was $609. Now he spent, looking for my cost of goods here. Let me fix this thing. Sorry about that, guys. Technical demos, live demos don't usually happen. This was the first, yeah, okay. The idea is that we want to generate a cost of goods sold. I'm going to create this very quickly. To Kristen Bakery. So we're going to pay for cost of goods sold. We're going to say $190. And that happened as of the 2nd. That's good. Here we go. That's better. Okay. So we have this sale that we realized from him. The expenses for the materials and the supplies. Now, technically, he has a net income, which is something that we talked about, net income of $154. Now, using the exercise that we had to set money aside for his taxes of approximately 25% of this. So we're going to use the number below. So that's the $154. And we're going to set aside approximately $39 into his savings account from the net income that we have here. So when the sale happens, the expenses are recorded against the amount that he received. So in this case, the gross profit is $229. The rest are supplies or any other things that he might be able to spend. We haven't considered rent or any of those things. But the net income in this case would be after all of the expenses have been accounted for. I'm going to pause here very briefly. And do any of us, using this exercise, do any of us can relate to Mark's situation? Okay. It could be probably tedious to be able to record all of these transactions manually. So the advantages of having an accounting software is that a lot of these things can be done automatically and you don't have to manually enter all of the transactions. So we're going to play with that a little bit.
Astrid, we do have a question in the chat from Kristen.
Oh, yes, yes, Kristen.
She had a question about, do you have to input each individual thing you buy, or can you upload receipts?
Wonderful question. Ideally, you would want to save the receipts. I always say save them either digitally or on paper. I normally prefer digital copy, and keep them in a way that you can always access them. Here's what happens. In the event of an audit, the IRS wants to see that the deductions that you're claiming are legitimate. And having a receipt to prove any deductions is the best way to show that the deduction is legitimate. So some people say, well, I have a bank statement. I don't really need to have my receipts, or, I forgot, I don't know, I only keep receipts for purchases of $200 and more. I would say, regardless, it's better to have the information and not having to use it than needing it and not having it. So yes, I recommend to keep your receipts. Oh, Luisa says something about having paper. That has changed. That has changed. I have
I'm
been.
sorry, I kind of ate all the words. For the CPA that I work for, they told me that receipt paper, and my boyfriend mom, who is an IRS agent, also prefer paper receipt, not digital. I don't know how long ago that changed, but that has always been my job, to save paper, staple them in order, and have it all given to the client. And then we save the digital on a cloud file
Mhm.
to have those to look back.
Yes, and that has always been the case. Many people that I have worked with, other CPA offices before as well, that they decided, or they always kept the receipts on paper. I have not found a section in the IRS code that indicates that it must be on paper. But I can share that I have been present in some IRS audits and other Oregon audits where a digital copy has been accepted as a deduction. Because as long as let's say that if you scan the receipt, you have the same information. And when the receipt ink fades, you have no access to that information, right? So you do need to provide the image that shows the vendor, the date, the amount, and the details of that expense. So yes, to your point, many people prefer to have the copy. I am virtual paperless, so I don't collect receipts from clients. What I do is whatever receipts that we have, we scan them all and we keep a digital copy. But thank you for mentioning that.
I do want to jump in and just make sure that we addressed Kristen's question. Kristen, do you feel like you received the answer you needed?
Well, what I was actually talking about was the QuickBooks. Like when you were putting in that they spent $40 on whatever, or on the things that you purchased. Do you really? I mean, I spend probably $1,000 on one weekend on a million items. Would I have to input them all individually into QuickBooks, or were you just about to get there and I'm just jumping ahead?
That's a great point, and that's part of the automation that we're going to talk about with an accounting software, in this case QuickBooks, since I know that you use it.
Okay, you were getting there. I was jumping ahead. I was just thinking to myself in my head, like, there's never enough hours in the day to enter all of that.
Oh, absolutely not.
Okay.
For me, believe me, that's one of the things that I like about accounting softwares, that it allows you to automate a lot of these things.
Okay, well, good. I have another question, but I'll wait until you keep going.
Okay.
Okay,
We'll jump right into your question. So, yes, when you have tons of receipts that you need to account for, and typing in every single expense or making them as a manual entry is going to be very challenging or time consuming. More than anything, it's going to be time consuming. And one of the advantages here is that QuickBooks Online has the option to connect or sync. They use the word often. They sync, the software syncs with your bank account. So when at the end of the day, any transactions that happened in your bank account, they're going to flow and connect in something called bank transactions or bank feeds for your accounting software. So in this case, they're sitting here where it says bank transactions, and they look something like this. What you do is and I'm going to play this quick video. If it takes too long, we're going to stop it. But what it is you're going to be able to connect your bank account by entering your username and your password and connect it with QuickBooks. And here we
This
go.
is Jason from the QuickBooks team. Once you've connected your bank account to online banking in QuickBooks, QuickBooks downloads your recent transactions every day. All you need to do is review each transaction, categorize them into the correct account on your chart of accounts, and then add them to QuickBooks. Let's go over how to review the transactions downloaded from your bank and how to categorize them and add them to QuickBooks. Go to Transactions to get started. You'll see a box for each bank and credit card you've connected. Select any of the boxes to see the downloaded transactions for that account. Here is where you'll see all the transactions that QuickBooks has downloaded from your bank. These aren't in QuickBooks yet. You still need to categorize them to add them. To do this, select the transaction to see more details. The vendor customer is optional, but it helps you run reports later to see who you paid or who paid you. Select the category that best describes why you spent or received the money. The category is the account the transaction will go into. If the transaction is a sale, categorize it as income. Select the income account that you use to track these kinds of transactions. You'll probably see lots of business expenses like rent or materials purchases. If you're recording a purchase you made, you usually categorize it as an expense. But if the purchase is something that you'll use over and over again for many years, like a vehicle or a computer, you might categorize it as a fixed asset. You won't see these often. If you don't see a category that works, you can add one here. These fields are for assigning expenses to customers to make them.
I'm going to stop it here because that section doesn't really apply to most of or in this case, the scenario that we're trying to paint. So in a nutshell, this section of transactions is where the bank and your accounting software feeds and they sync with each other. So we're going to start building this information as the transactions are happening. So here we're going to say that in this case, this person or this business received $200. So notice that it's in the received column. So we're going to select the same client. Let's keep using Hacienda as the client. And in this case, this was an income for services. So we're going to categorize this as income. Now, I only did 2 entries here. As of today, I received $200. I didn't have to manually enter the invoice, receive the payment. I'm just accepting the money as it comes. Now, I'm also going to any expense that I have. In this case, we're going to assume that the vendor was again Kristen Bakery, and these are going to be supplies, not income, but supplies. And I'm just going to add the transaction. Now, I do that in every transaction as they happened. So notice how things are split by month. So we started with July all the way through August, and now we're in the very first day of October. So as this happens, the next thing I want to show you is what happens. I only did maybe 3 clicks per transaction. And that was as of today. And that money, those $200 are here, and the 1,200 that I just categorized is here. So I don't have to manually enter, to Kristen's point, I don't have to manually enter the transactions. They are already fitting or syncing with my bank, and I just have to go through each transaction and categorize it. Now, she asked about the receipts. So what happens if all I have are a bunch of receipts? This software has the ability to recognize any receipt that you have or the image, and you can upload it from your computer. In this case, I don't have actual receipts to do that. Or you can upload it from your Google Drive if you use that. Or, or anything that may have been sent as an email. I like the option of uploading from your computer, because if you have a digital copy and you scanned your receipts, then you can upload them one at a time. And once the transaction is recognized in the receipts, all you do is go back to the bank, and this system matches all of the transactions from there. Okay. This is part of the automation process. There are other things that for people that use a swipe system like Shopify or Square, there are app transactions that happen as well. And these are some of the apps that connect or sync automatically with QuickBooks, so that when the transactions happen, when they come through, they are already part of the exactly as you see it with your bank account. It connects with your app, and the transactions sync together. Okay, so and let me just disclose this for the presentation. I chose QuickBooks Online because it's something that I use very frequently with my clients. I wanted to paint the picture of what we are able to show when it comes to managing your cash flow, how the money comes in, how the money goes out, and what are some of the potential scenarios of that persona that we created at the beginning of the presentation. So that was the whole idea of creating these transactions. There are so many others. Like I said, FreshBooks is an option, and there's so many other ones. Before continuing, I would like to open the floor for any questions that you may have.
I have some questions.
Yes.
I like how QuickBooks works. And I was wondering if the QuickBooks replace a bookkeeper.
I'm sorry. Can you repeat that question again?
If the QuickBooks could replace a bookkeeper person that can do the same work for you?
Oh, wonderful point. It really depends. The type of business that you have and how much time you have as a business owner to do these transactions. So in addition to that, it depends on your cash flow. Because if you are able to pay for a bookkeeping service, then you may not have to spend time doing the accounting work yourself, and you can pay someone to do it for you. There is an extra step, and I'm going to go over that in a little bit, that a typical bookkeeping cycle or an accounting cycle has to take place in order to ensure that your transactions are reconciled correctly. But do I have certain clients that do it themselves, that they're very hands-on and they like to classify these transactions by themselves? Yes. And what we do is we do a month-end review or a quarterly review, but oftentimes they still need that extra assistance from a professional just to help them sort things out and make sure things are accurate.
Thank you, Astrid. I think Juana also has a question, and then Tainese as well. Juana? You are muted, by the way.
Y yo tengo una pregunta. Ustedes van a compartir el PowerPoint, ¿sí? Y la otra pregunta es, a mí me gustaría, o no sé si en el PowerPoint tengan ustedes un sempo de un invoice lleno y un sempo de un invoice vacío, como para practicar. Y la tercera pregunta es, yo pienso que Daniela podría recomendarme una persona que haga payroll. Y no sé si es igual payroll que la nómina.
Excelente pregunta, Juana. I can answer in English. Or maybe we can translate the
No, no sé.
question to Spanish. I'm sorry, to English.
I'm little bit, not much.
No, it's fine. I think our interpreter, or I can translate if that's
Mhm.
okay.
Yeah.
Okay, so Juana's question was around an invoice template. So she wants to know if we will be able to provide an invoice template. I don't have one at the moment, but
Mm.
I'll answer that in a bit. The
Mhm.
other thing is, she asked if we will be sharing an invoice that has been filled out with information and one that is empty. I'll give you some options that you can use when you're not using an accounting software. And the next question is about payroll. And she also used the word in Spanish, if those are the same things. And the first question is, there are many templates that you can use, and nowadays it's so much easier. And I'm gonna find, maybe in Microsoft here, we're gonna go very quickly to show you that, Juana. Excellent point, because you don't really need to spend a lot of money when you're starting, right? So you want to, let's find one in Word. So in Microsoft gives you some templates that you can search for. And I just typed in the word invoice and many options came up. So we're going to use this one as an example. And this has already been filled out for you. So it allows you to change the information where you need to change it, and add the lines, make it your own, personalize it. But this is in Microsoft. I only went to Word, and within the Word template, I typed in invoice and you can find it. Someone shared in the chat that you can also do this with Google Docs. That's also a perfect platform to use templates. I use them all the time, not for invoices, but I use templates for other things. So it's a great source to use it. And now, the PowerPoint will be shared.
Okay. ¿Puedo hacer la última pregunta? A mí me gustaría, no sé si es posible obtener su número de teléfono aquí de Daniela.
To Juana's question, she's asking for my information, and the answer is we'll share that at the end. Okay, so the next question she had was as far as payroll, or if they were the same thing as nomina. The answer is yes. Payroll is the English word for nomina. And for payroll, it is super important.
Okay, gracias.
Con mucho gusto, Juana. My pleasure. Now that she's talking about payroll, this is something I feel that we can spend a whole hour talking about payroll, but we're going to just summarize it very quickly. Payroll is when you have employees that you distribute a W-2, those usually require quarterly filings, quarterly tax payments, yearly filings, and you must be compliant, and you need to provide a form to your employees at the end of the year in the form of a W-2 to summarize all the payments that you gave them throughout the year. Okay. Now,
we still have one more question if we have a little bit of time. Tynese, I believe you've had your hand up. Nope.
Yes, I did have my hand up. Sorry about that. So my question was, so like I don't really have like inventory as like food goes and stuff like that, but I do have to have like certain like cleaning supplies and first aid kits and different things like that when I do like, after daycare and stuff like that. So I know you was talking about, I think it was textbook. But what were some of the other ones? So I tried to screenshot it, but I think I got it too late. So I didn't really get to see the other like accounting apps that I could possibly use to try to like help budget my expenses and different things like that.
Yes, I'm happy to repeat that, Tynese. The one of them is called Xero, Xero, and I'll go back to that slide to show you. Then you have FreshBooks, Wave is another option, and Soho. And all of that would be in that PowerPoint information, that slide that has the name of those accounting softwares that you can use.
Okay, and then like and I know you were saying like a couple of them was free to use. I know I probably eventually have to pay for them, like the more I end up using it. But are they like pretty self-explanatory as to like, I mean, because I'm already like, I'm not gonna say I'm like already in a hole, but it's like I already started my business. So will it like help me be able to, I guess, like start from where I'm at now and kind of catch up for what I did, get over the year and then like be able to like kind of go from there, see what I'm kind of in the hole from and like kind of play catch up from that way? Or how do I go about that? Or like will the software kind of help me in that way? I don't really know how to ask the question, but will the software kind of help me keep my finances together and then be able to look at what I already got from the daycare, what I spend, different things like that, and be able to add that to the software to see if I am in the negative or if I'm kind of on track as far as tax time. So that's my only really concern, is making sure that I put enough taxes away once each, like every time I get paid from the daycare.
I love the question and thank you for bringing that up, because you are right. When you're starting and you have maybe some years that you didn't track things and now you want to start in 2024, don't worry about the last years. Okay, so now if you're going to start in 2024, the assumption is that you already filed your taxes for 2023.
So I just started it. I just started my own this year. So starting in January.
Perfect.
So it's not like it was like years ago. I'm just now starting my own daycare this year, starting in January. But I've had kids that came to the daycare, that left the daycare, to where it's like made my income like fluctuate to where it's like, because it was summertime, I had maybe had more kids come, but now that this like school time is coming, like I don't have as many kids as I did get, so my income is not going to be as much as it was in the summertime versus like the school year.
Yes, so there are three things that I would recommend for functionality with the software, and then to your point, if these things are user friendly or the softwares are user friendly, the majority of them are. And they have different options and different tiers. I see in the chat that someone said for invoicing, they use Wave and it's free. Now, my question to you is, do you invoice your clients? So if you don't invoice your clients, then maybe that's not a good tool for you. But if you need it for invoicing, that's a wonderful option. Now, the other thing is, I was mentioning three things. So one, determine what you need it the most for. Do you need it to track all of your expenses? Or the second thing is, do you need it for invoicing? And now that you have more time on your hands, do you have the time to classify and categorize these transactions? Because if budget is an issue at this point, you're able to use other tools that don't necessarily have to be an accounting software. One thing that I do as an alternative to some of my clients is that we go over the download of all the transactions, and we download them in an Excel sheet or in a CSV format, and then we start to categorize, because the CSV format gives me everything since the beginning. So it takes a little bit of time, but it helps you to kind of categorize things in a lump sum or by month. So hopefully that that answered your question. So the next thing is, I would like to, if it's okay with Melina, I would like to continue from here.
Yeah.
Okay, wonderful. So we talked about some of these softwares. We did that live demo. We reviewed not technically all financial statements, but we went over the profit and loss statement, and we addressed some questions here that you guys had. What I want to go over are some of the functionalities that any accounting software should be able to deliver. And that is, in your accounting cycle, when you decide if you need to work with an accounting professional, is to compare that the transactions are accurate. In other words, you want to be able to know if your accounting system has the same information as your bank statements, and those two are correct. To do that, there is a process called reconciliation. That is the work of the bookkeeper or the accountant that you hire to make sure that whoever is working on your books, that they're able to reconcile your transactions. And what that really means is that you're going to grab your bank statement for any given month. And when that happens, oh, come on. When that happens, let's say that we're gonna use a beginning balance for any for the month of September. It was $5,000. Then the ending balance was $2,000 because we spent money. So we're using the end of September as our date. And if I have transactions for that period, the accounting professional or the business owner would have to go through the deposits, compare this information with your bank statements to make sure that this information is accurate, review the expenses with the bank statement on hand, and make sure that everything here has been accounted for. As you do that, the difference should be 0 when you finish. If the difference here is not 0, that means that there are some items that are either missing or duplicated. So to sum these things up, the accounting cycle is how the money comes in, how the money goes out, and then at the end of this cycle, you compare the transactions to make sure that you recorded everything correctly. Okay, so that is something crucial. I know that this is not a bookkeeping class in terms of how to bookkeep, how to do your reconciliations, but I did want to show you why that is important, because in any accounting cycle, you're going to have to reconcile and compare the balances as they happened. So this is it for my presentation. Thank you very much. It's always a joy coming back to Hacienda CDC and being able to share with you all the information that that comes along with owning a business. Thank you for helping me solve the issues for Mark and his coffee shop. This is my team. If you would like to check our website, that is our website. I work with my 2 sisters, and like I said, we're 100% virtual, so feel free to visit our website. We offer 30-minute consultations, and I'll be very happy to help you and answer any questions you may have after the presentation. So thank you very much.